Good evening, everyone. I just wanted to check if Luke, if you're available, are you there? Hello. Oh, it's coming. If you give us 30 seconds, guys.
There you go. There's Luke.
Just bear with me, guys. Sorry, the other panelists, Luke and Mark, we're just having a couple of technical difficulties. Just bear with us. Sorry. Can you hear me, Luke?
Can you hear us, Adrian?
Yes, we can.
Yeah, how you going?
Hello. Right, can everyone, can someone just shoot me a quick, yes, I can hear you out there before we actually get started? Anyone out there? I know there's a few out there. Can someone just shoot in just, yes, we can hear you or whatever, please?
Do you want me to?
No, you won't be able to, Nita. Anyone? Can someone quickly fire back? Yes, you can hear. Thank you. Thank you very much. All right. What I'm going to do is just share my screen and then I'll give an intro. Righto. Now, sorry for the technical difficulties right off the bat, guys. Appreciate you hanging in there with us. Anyway, today we've got a two-part presentation from Luke Pryor and Mark Clemson on general insurance and life insurance and some coronavirus considerations that need to be factored in with some time for Q&A. And then after they're done, I'll be doing a quick presentation on some of the state-based stimulus measures that are out there right now that you might be able to benefit from as well. So Luke and Mark, what I'll do, because I'm driving this at my end, I shall run this for you guys, and you can just maybe, I'll just get a gauge from where you're at, and we'll go from there as each slide goes through. So I'll let you guys maybe. Oh yeah, sorry, Jesus, sorry about that. Sorry, yes. Luke, we've known for years and years and years and years and years. Mark only in more recent times, but they're our preferred and personal, sorry, they're our personal general insurers and life insurers, or not life, it's risk insurance, which is income protection, TPD, trauma and life, as well as all the general insurance needs. These are guys are the ones we use personally and the ones we recommend professionally for our clients. And you know, the thing I love about them is that they're practical, and like us, they're very much aligned with the way we do business, which is get the job done and use everything within your power to get the job done within the rules, and try and get it done. If there's a way of getting it done, they'll get it done. So that's in a nutshell.
I also like the fact that they review us every year. So they'll come out and sit there and see what our needs are, whether anything's changed, and well, if they've got any new products or whatever, they'll work with us and make sure we're all up to date and everything's yeah, the way it should be.
So the floor is over to you guys, and just give me a cue if I don't work it out. Give us a cue and we'll keep going. Whoops, there you go. Helps if I start the right. There we go. Start off with your disclaimer, boys, and I'll let you go.
Hello, everybody. This is Mark Clemson speaking across these airwaves. Hello, everybody. I'd like to just spend 1 second on that general advice warning, because really the discussion today is absolutely general in nature. It is not specific to anyone's particular circumstances. the regulators that control us really want us to obviously put a warning like that up, and of course now we've done it admirably, we hope. So Adrian, if you could flick to the next slide. Yep, thank you. This is the presentation from Luke and I today. Obviously some commentary around the life insurance aspect with COVID-19, and of course then Luke's going to kick in and talk in detail about how COVID-19 will affect general insurance. So that's and then some questions so that's pretty much what we're talking about today. As you can all now see from the slide that Adrian's popped up there, these were just some simple Q&As that our clients were asking of us, and we've obviously put together this slide for all of you now, and I'll quickly just cover it off. It reads pretty nicely, we hope, and fairly clearly. Number one, there are pandemics or COVID-19 excluded from your policies. Now, the answer to that one is a good one. It's no. So we're hoping that this answer will give every one of you a whole lot more security, because at the end of the day, that's why you're buying insurance, of course, is to buy security and buy peace of mind and transfer risk. And the bottom line is that there is no blanket exclusions on existing, and I underline that word, existing life insurance products delivered by financial advisors to the public, and for most part in the industry. What we have also done there is that for those of you who wish to get a little more detail there, we've given you a link such that you can type that into your browser and get some information. And I've done that now, but of course it won't come up on this screen. But what that link will tell us, which is once again comforting, we hope, to all of you, that companies like the AMP have made comment, MLC and BT and AIA, Clearview, TAL, MetLife and Integrity Life, all of these companies have said the same message, that existing policyholders have cover for COVID-19. Not very nice if you do get COVID-19, a lot of fear and risk and concern, of course, for each and every one of us if we do, but nice to know that your insurance won't bail out. If you do, it'll stand beside you and support you. Another comment.
Mark,
hello. Go on.
I don't know whether you'll cover it next, but obviously these are annual policies. If you roll it over, it won't change?
No, they won't. And it's a very good question. Life insurance product sold for many, many years is what they call guaranteed renewable. And that means what it says. It means that regardless of changes to your health, occupation and so forth, the life companies will guarantee to renew that policy next year, as long as you continue to pay, of course.
Yeah.
So that's once again a good comfortable reassurance. We've been asked actually in the next question there that, will I be able to claim on income protection, for example, if I'm quarantined or self-isolated due to travel or exposure? Look, the simple answer there is no, and that's because when you're healthy and not sick, there is no trigger, there is no way to make an income protection claim. You may all ask, why have I brought income protection up as an example? Well, it's because in my experience, I feel that the frontline protection policy from a life insurance perspective with COVID-19 is likely to be an income protection policy. And the reason will become obvious as we work down this page. We have been talking to many clients, and we see with many of the clients we review that they have, at the bottom of this page, benefits in their income policy called a bed confinement benefit. Now, the best way for me to explain that, and just, I know there's a lot of talking and to try and digest this for all of you, but if you do a line graph now, if any of you have got pen and paper in your hand, I know there was no advance warning on that to have pen and paper, but if you're doodling and scribbling, great.
Yep.
On a line graph, just draw a line graph and then the number 30 to the right of the 0, and then further out 60, and then further out 90. Now that line graph that I've asked you to draw there, that is effectively the waiting period on an income protection policy.
Yep. The
The 30 represents, of course, a month of waiting period, traditionally before the policy triggers and can pay you some money. 60 is obviously 2 months wait, 90 is three months wait.
Yep.
Now, for everybody who has an existing income protection policy, and if it's comprehensively worded, and if you're in hospital for 3 or more days, your policy should be able to pay you for COVID-19 admissions to hospital, and for that matter, any other admissions, including COVID-19. So the bottom of that page there, Adrian, that is just simply trying to explain to folks that the bed confinement benefit is a way that you could actually be paid for hospitalisation inside your 30, 60 or 90-day waiting periods if your income policy is comprehensive. And if it's not, you will have to wait till the 30 days expire. That's a bit like your car access, before you could then make a claim if you're still in hospitals or still sick and the doctor says you're sick. So hopefully that explanation is reasonably clear and reasonably understandable. So the next thing I want to do, if you can just, where we go, there we go. You've turned the page perfectly, Adrian, thank you. I'm just going to go right to the middle question there on that page, and says, can people still apply for cover and is additional underwriting in place? The answer is yes. People can absolutely still apply for cover, and there is a bit of an evolution, of course, as this virus is being more clearly understood, but the underwriters are simply asking for, is this person at risk? In other words, have they had the illness, obviously? And if they have, the answer is probably such that their cover will be deferred until they're well again. So I suppose that's no real surprise to anybody, but the good news for those who are looking to increase their policies now or to buy brand new product, the question is, yes, there'll be some additional underwriting questions to confirm whether they're healthy or not, or whether they have additional risk or not.
Yep.
So hopefully that covers that one off fairly nicely.
No, it's not.
Yeah, that's fine.
I'm going to go to my last little stretch here, and I hope I'm not going too long, folks. Am I going okay at the time?
Oh, good. Perfect.
I don't mind being told to stop talking.
You're right. That's good. These are questions I would have asked. Sorry, that's fantastic.
Thank you. So look, we're going to go to a very, very hot topic in my world, and that is, of course, which policies respond to a mental health condition. What I've done before I launch into those 3 points there, I've just got in my possession here that obviously none of it you can see, but that's okay. Look, a major life insurance company in the last 12 months, in 2019, for example, they just, in the whole of their claims department, they paid out $980 million. And roughly a third of those claims were due to income protection claims.
Yep.
The other third was to do with this thing called TPD, total and permanent disability.
Yep.
If anybody wants to understand what TPD is, it's the situation that poor old Superman suffered, Christopher Reeves. He jumped over that horse jump and became a quadriplegic, and overnight the fellow was TPD. Then he unfortunately took a further 9 years before he passed away. But that's TPD, total and permanent disability. And of these $980 million worth of claims paid by one of these major life companies, a third, again, was paid for life insurance claims. So the point being, by making all this point to you, is that which policies can respond to mental health conditions? We are probably going to see a whole lot more mental health claims, potentially, as this COVID-19 runs through the community. This is a hell of a difficult area for life insurance companies to grapple with, particularly when we see the claims experience. With income protection, interestingly enough, the major cause of claim is accident, and the second major cause of claim is musculoskeletal claims, and then the third is mental health. So in terms of mental health and which policies respond to mental health conditions, I'm now sort of talking back to that slide on that first point there. Income protection is probably the first policy that will and does respond to a mental health claim.
That's interesting. I didn't know that.
Yeah. And then we're finding that the second most likely policy to respond to a mental health claim will be a total and permanent disability policy. And most of you, well, some of you may have TPD policies attached to your super funds, whether it be in a self-managed super fund or whether it be in an industry fund or whatever. And mental health claims absolutely are well represented in TPD policies. And we see a lot of litigation lawyers that have gone crazy, firms like Slayer and Gordon that have gone crazy in terms of litigating insurers with members in industry funds to secure claims for them. So bottom line is that this is a very difficult.
Mark, just there. Do they really have to fight that hard to get the claims through?
Yes, I can answer that. A client of ours, who I won't mention their name, had an industry policy through an industry fund, superannuation fund. They had to fight like dogs to get that payment because as you know, with insurers, I know I'm generalising here, but they don't want to pay anything they don't have to pay. Now, I know for a fact this person had to go and get a massive lawyer to go and fight her claim with the insurer who was behind the superannuation fund policy to get what she was really entitled to. They did not give it up easily at all. That took over 2 years.
Mark, can I ask whether that's common experience for yourself?
It's interesting you should say. I have this story that I call my Helen story, and Helen was with not an industry fund, but with an employer fund. And it was a fairly big retail fund, and it took me 13 months to get her TPD claim paid. It was a difficult fight. In the end, we threatened the litigation pathway, and before it got anywhere near really litigation, it did take 13 months to finalise the claim.
Yeah, but you guys were able to do that without going to litigation. So there's a big difference too.
Correct. And it really was that because, in fact, we didn't even have any skin in the game. It was a pro bono piece of work that we did for Helen. And look, in my 30 years of doing this job, it's probably my proudest moment because the $675,000 that was paid, and my client couldn't believe that we didn't charge for that work. And I suppose in retrospect, the amount of time it took us to fight it, we probably ought to have put some sort of fee on the table, but we didn't. They turned out to be wonderfully loyal clients, and we've been repaid, we believe, in spades with their custom for years. But the bottom line is that, yes, we advocate for claims, and that's our job. We can't walk away from the claimants and clients at the time of need. And thankfully, you know, I've done so many income protection claims over the years. We know what to ask the insurers. We know the medical requirements. And we know how to fight. And we usually, with our clients, when we understand them, we haven't had to work as hard as some. That Helen claim was painful, but most haven't been that hard.
Yeah, see, there's a real wonderful asset. And the claims that we've had through you guys, not necessarily we've had any in this area.
No, it's been in general insurance.
In general insurance, but that's it. You're there batting for us. I mean, you're able to do that and save the client money. They'll lose with lawyers because they're going to take their
stress,
share.
Anxiety, everything else, sleeplessness.
And if this started with mental health, that doesn't help.
It doesn't. And look, it's interesting, with those life claims that I said was 980 million with this insurer, a third of those claims were life claims. But interestingly enough, mental health life insurance claims, in other words, somebody's died, 1%. So it's a very low percentage rate that mental health causes life insurance claims or somebody to suicide. It's not interesting, but it's a fact. The higher the sum insured, the greater the probabilities. I suppose when we're talking in the $5, $6, $10 million sums for life insurance, that's when there's more incentive. It's an awful thing to discuss, but that's apparently when there's more incentive for somebody to not be here and take their own life than with smaller sums. And finally, my final point today is just to say that yes, if things went terribly wrong, for somebody and they decided that to exit this world was their best course early, life insurance policies do pay on suicide, and they do pay if the policy's been in place for 13 months or longer. The rationale there is that if somebody's not very well and they decide to buy a life policy and then take their life, they'll do it inside 13 months and not wait 13 months. That's the rationale behind that 13-month waiting period there.
Can
But,
I ask a
please.
question there, Mark?
Yes.
I mean, I've got conflicting messages, okay? So I know when we had one of our policies and we did actually go and get some help for mental health.
No, it was more about stress management than anything else. It
Yeah,
wasn't actually, well, sorry, I know it's probably deemed part of mental health, but it was nothing more than, if you got any suggestions on how to manage stress, right? That was probably the sum of the conversation. Keep going.
Yeah, and so basically you go and get some help, and then there was an exclusion put on the policy. I find that to be a bit of an oxymoron.
And a bit over the top.
Absolutely, I completely understand that perspective, and we're finding, thankfully, that with the great work that Jeff Kennett's done with Beyond Blue, that there's a much greater awareness and a much lower stigma being attached to mental health. And we're finding that if there was an episode of mental health, and if it was a known cause, and we're talking about a very human reaction to something like grief, like losing a loved one, sometimes the insurers, after 5 years, are saying, we can review that. That's historic. That's in the past. It was a human reaction. And we're absolutely finding this regularly, and it's quite encouraging for me as a practitioner to find this. If it is 5 years post-recovery of that event, we're finding we're getting cover for clients, full cover with no mental health exclusions.
So
that's encouraging. That never used to be the case. In fact, only 3, 4, 5 years ago, if anybody had disclosed any mental health history in any way, all bets are off, no cover was offered at all. So we've come a long way. The insurance company, life insurance companies have a long way to go, sure, but there is some positive progress there, and it's a tough discussion, and it's one that I treat with the utmost respect and privacy, because it is so private. Nobody needs to know anyone's business in this space. It is really, really critical that anybody that consults with us knows their security and privacy is paramount. It's something that I take on board seriously.
Just there. So if someone is getting help, okay, so you've got two scenarios. They're getting help and they take out a new cover. You've got exclusions for 13 months, or are you saying that's an exclusion for 5 years?
I'm actually saying if they take on cover now and they're currently undergoing treatment now,
yep.
They will absolutely have a mental health exclusion on a TPD policy and an income protection policy. That will happen across the industry for sure.
What about life insurance?
It'll never be an exclusion. If they offer life insurance, there's never a suicide exclusion, if you like. They just take you on. I'll give you an example. I had a mental health nurse. And this is, I suppose, the stresses of a mental health nurse would be pretty frightening, let's face it. I can't imagine what they would see in their work. And this mental health nurse was very mentally unstable, and I'm not surprised. And that this person's risk of taking their own life, in fact, they'd attempted on 2 occasions, they were just unable to achieve any cover, including life insurance, at all.
Well, yeah.
So that's the extremes, the underwriting tools that are used. From decline outright, no can offer cover, absolutely none, to yes, there's been no attempts at life, and yes, life insurance is fully covered, including mental health.
So, but for instance, just one more comment on that, and then we'll move on. What Nita mentioned before, that exclusion was put on us for 5 years just by asking how to manage stress. It wasn't even getting psychological help or anything else. It was a pure one sentence conversation with a GP.
Yep.
Got the ideas about managing stress, and that was enough to get exclusion for 5 years.
Yes. Yes, look, the industry has been shaken by the amount of claims. I could literally snowball this whole presentation for another half an hour in discussion. Yeah. And I'm happy to, for anybody who wishes to take this discussion further and talk longer, absolutely contact myself at Atlantic. Very happy to have a very personal and private conversation individually for anybody who would like to do so. So,
Yeah.
I just wanted to, bring these difficult topics out to the open. And the more upfront we are all about it and honest and open, the better.
Yeah, and especially in this time, because I do think this is a bit of a topic and it's going to be a little bit of a factor.
Yeah, the next 6 months, I agree with what you said before. This is going to be a massive spike in this.
Yes.
Yeah. So does anyone have any questions before Mark concludes his part of the presentation and we hand over to Luke? I'll pause for a second or two.
No, that one. Yeah, no, that's okay. That's just.
I'll give everyone a couple of seconds. Doesn't look like anything's coming through. Look, Mark, thanks so much. The other thing to bear in mind, Mark, is I know with everything that's going on in the world the last couple of weeks and all that sort of stuff, there's going to be a lot of people who'll be listening to this later. So understand that even people aren't on today, it's going to go out to all our clients and all that sort of stuff. So thank you so much for giving us your time today. And unless you've got any final words, I'll move on to the next part of the preso.
No, thanks, Adrian and Anita. Thank you. I'm done. Appreciate your invitation. Thank you.
Oh,
No dramas.
Thank you. And thank you, because I know you had to go to special efforts to get special permissions with your advisories to actually share that with us. So thank you very much.
Pleasure. Thank you.
Over to you, Luke.
Thank you. I'm just here more to talk about the general insurance side of things. So Mark specialises in the risk insurance here, and we do all the general stuff. So we've got a team of people that specialise in general insurance. And general insurance could be anything from motor to home to business insurance. As a business, we've got a lot of clients in aged care. We do manufacturing, pubs, hotels, basically any sort of business, accountants, obviously, anybody you can think of. So we've had an interesting couple of weeks, and I suppose sitting in my side of things, we've had some pretty difficult conversations with clients who are really struggling, probably no different to a number of your clients, Adrian and Anita. It really depends on the industry and how they've been affected. I know we spoke last week, but the sad thing that I've seen is that I had clients that I've had for 10 or 15 years who run really good businesses and really struggled the last couple of weeks with revenue getting turned off. And a lot of the questions that we've been asked, we've never even thought of before. So a lot of the things that I'm going to run through are probably just some common questions that we've been asked in the last couple of weeks. And then just, I suppose, the responses that we're getting from insurers and sort of what we're seeing out there. And unfortunately, a lot of this stuff, there's often no straight answer, because we deal with a number of different insurers, and probably, if you take underwriting agents into account, probably 50 or 100 different insurers. And unfortunately, because the insurance industry is so big, to this point, there sort of hasn't been a common approach, and every insurer is out there sort of doing their own things. So,
Andy, so they're all different.
Sorry?
So they're all different.
They're all different. And saying that, there has been the ICA is trying to get everybody together. And what we're probably seeing is there's a bit of follow me now. So a couple of insurers came out late last week and announced what they were doing with putting a pause on premiums and things like that. And what we found is the last couple of days, most insurers have followed, but there's still no consistent approach. So we're probably still reminding our clients that if you've got questions or things are changing in your business, to actually get on the phone and have a chat with us, and we'll talk about your individual circumstances, because it's really difficult to say if this happens, all insurers are going to follow this path. So, but there has sort of been some common approaches from insurers, and what I thought I'd do is just concentrate on some of the most frequently asked questions and I suppose what insurers are doing. So I'll just kick off, and then maybe if we get to the end, if people have got questions or certain things we haven't touched on that is impacting their business, we'll try our best to answer those as well. Probably the biggest change we've seen for those businesses that are still operating is just this rise of remote work. And we've even been talking internally here. I think even once this is all over with, there might be a change in the way people work going forward. I know just us as a business, getting used to using Zoom meetings and Microsoft Teams and things like that. We've probably learned a fair bit in the last couple of weeks, but that also throws up other insurance risks that we need to think about as well. So probably the first one is, does my business contents insurance move to my home if I'm working from there? Obviously, I know what we did here is not everybody was set up to work remotely. So we said to our staff, listen, take your computer and your screen and your desk chair and things home, and make sure what you're doing is safe and meets all OH&S requirements and that sort of thing. Some business insurance policies will extend to cover temporary removal of business contents to people's homes. And that could be that if you had a fire and a theft cover, the insurer would provide a 20% sub-limit for that office equipment at home, but some don't. So it's really important that if your staff are taking office equipment home or even stock or other equipment, some of this stuff's pretty expensive, that you do speak with your insurer or your insurance broker to seek clarification on if that business contents and that stuff and computers that people are taking home are covered away from the premises. So
Luke, imagine if I was with you and I didn't have that cover in the policy that we had. Could we change it now that these all circumstances have changed?
Yep, definitely. And that's sort of the conversation we're having with clients, that we can take a general property cover, which will give Australia-wide cover on contents. But it's really just about understanding how your policy responds and then making the necessary changes. A lot of clients have said, listen, it's if we've got 15 or 20 staff, it's only $2,000 or $3,000 per person. I'm not going to get a total loss where all that equipment is lost at once, and they're self-insuring. So it really depends on the style of business and how far they want to go with their cover. Probably more of a concern is what actually happens to the business premises if it's vacant. So what a lot of people don't understand is that under most business insurance policies, same as home insurance policies, that if a premise is unoccupied, and often it's 60 or 90 days, if those premises are unoccupied, there's really strict exclusions and conditions in insurance policies. And we see it a lot in home policies that, if a house is unoccupied for more than 90 days, there's really no cover. And insurers don't like unoccupied premises because often the risk of malicious damage and theft and stuff like that is a lot higher. So most policies, whether it's a business insurance policy or a home insurance policy, will actually have exclusions that say if the premises is unoccupied for 60 or 90 days, there's no cover, or there is cover, but there's no cover for fire and malicious damage and those sort of events. So it's really, really important that if you're a restaurant or a cafe or a manufacturing business and you have closed and you're not unlikely to be at that premises for 60 days, that you actually speak with your insurer or your broker and just seek clarification on what you need to do to have that exclusion removed. And what we've sort of seen the last few days is a number of insurers come out and CG and QBE. One of those has said if you meet these conditions, we're going to waive that unoccupancy exclusion while we're in a forced government shutdown. But I'd still be recommending to have a conversation with your insurer just to seek clarification on that. You'll probably find more insurers will come out in the next week and remove that exclusion. But again, because all policies are different, we definitely recommend you seek clarification on that point. We just hate somebody to, have a $1 million fit out in a restaurant tied up and all of a sudden there's a fire because you haven't been there for 90 days. There's no cover.
Yeah, we've got a lot of dentists and they have a lot of expensive equipment, so that would be the same for them too.
Yep, that's exactly right. So definitely don't just be having a conversation, and even if that exclusion's in the policy, insurers are open to removing that. We are sort of seeing insurers bend over backwards to try and help at the moment. This is probably the most common query that we've had, this next one, over the last few weeks. And it's, does my business interruption cover respond to interruption caused by COVID-19? And most businesses, if you've got a good insurance policy, will provide some sort of cover for business interruption. There's different ways that cover can be set up. It could be a full gross profit cover, or it could be just additional increased costs of working. And then probably the classic example to use is just a restaurant. So generally a restaurant will have a cover that if a premises is damaged by a fire or storm or impact, potentially machinery breakdown, depending on the policy, that will then trigger a business interruption cover. And that will cover a business's loss of gross profit while they can't operate. So what we call insurable gross profit is different to what an accountant will call net profit. And it will basically cover all the business expenses while the business was rebuilding. So an example to use would be a restaurant that suffers a fire and the business is out of business for 6 months while they're rebuilding. The insurer would pay the loss of gross profit while they're rebuilding and continue to pay that loss of gross profit until the business was turning over what it was before the loss and up to the indemnity period. So it could be, you could have a 6 month, a 12 months, a 24-month indemnity period. Over time, those business interruption policies have been expanded to cover events that aren't normal insurable events, so things like fire and storm damage. They have been extended to cover suicide, infectious contagious disease, and I did have a client that was a sort of a high-profile restaurant that was closed down due to basically gastro outbreak. And that did trigger that business interruption cover. It's a substantial business interruption claim because that had to close for a couple of weeks while they did a full clean of that restaurant. So unfortunately with COVID-19, because it's been classified as something that's notifiable under the Quarantine Act and Biosecurity Act, it isn't something that is covered by business interruption cover. And the question of a lot of clients is, why are insurers excluding that? Why is that endorsement in a policy? The basic answer is insurers don't have the capital to pay these claims. And you can imagine if every business in the world right now is impacted in some way and insurers were paying a business interruption claim on every business in the world, they just wouldn't have the money to pay those claims. So it's actually an endorsement that's pushed onto insurers by reinsurers that sit above those insurers. And that was made after the bird flu and the SARS outbreaks years ago, where insurers did some modelling and said, if we had a worldwide pandemic, would we be able to pay these claims? And the answer was no. So it's not even grey. Every insurance policy that we've seen, and we've spoken to our loss adjusters and claims people and people that we use for tricky claims. There's really no insurers that are covering those claims unless it's a policy that was drafted specifically for that risk. So potentially there's some cancellation covers and stuff out there that may respond, but again, even an off-the-shelf event cancellation cover would exclude communicable diseases basically. So unfortunately, that's sort of been led to some pretty difficult conversations over the last couple of weeks.
Yes, one of them was asked.
Yeah, that's right. And nearly every client that we have has rang up and queried that. We tried to jump on the front foot, but unfortunately, there is no traditional business interruption cover for pandemics.
Can I ask a quick question before we move on, Luke?
Yeah.
In relation to point 2, I didn't want to interrupt you till you'd finished everything on this page.
Yeah.
Take us, for instance, because rather than use someone else, I'll use us as an example.
Yeah.
If we're not at our office, but let's say, someone goes to work there a day here or a day there because they can do that because there's no one else there. They can still be by themselves, right?
Yeah.
Would that be okay to get around these problems and rules?
Yeah. I mean, if one person was there every 2 weeks, it probably wouldn't be classified as unoccupied. And a classic example is a holiday house where if you've got a 60-day unoccupancy clause and you're going there for a weekend a month, then it's not classified as unoccupied.
Plus, Luke, we're getting the backup 3-4 times a week personally and going in there, checking everything, staying for a little bit, then going. That would also help, I would imagine, too.
Yeah, that would help. It's more if you turn the key and move into state for 90 days.
Okay.
And again, you probably find there's some flexibility from insurers around that. This next one is something that is moving every day, and will my insurance premiums reduce, or can they be put on hold during the pandemic? I know I spoke to Anita earlier today about this, and there was some stuff.
There was a financial review. That was its fault. It said that a few of the big boys had come out and said that you can do
Yeah.
this. So,
Yeah, and they haven't. IAG probably jumped the gun on everybody. What I suppose it's similar to the banks, and while IAG had come out, and a lot of other insurers have followed the last couple of days, QBE, Vero, Allianz have all come out with similar things. What the insurers have come out and said is that if you're at risk of hardship, we'll basically put a hold on your insurance premiums for 6 months. It's really important to note that isn't free insurance for 6 months. And probably our concern as brokers is if businesses are struggling to pay their premiums now, what will change in 6 months' time? And if we get onto it early, there is options that we can do to actually put instalment plans in place or use premium funding and things like that. So the conversations we've been having with clients around that is that, okay, if things have changed in your business, and a restaurant's a classic example where if you're not operating as a restaurant at the moment, there's probably certain parts of that cover that you don't need at the moment. And on exactly this conversation, again, the high-profile group of restaurants last Friday, and they decided they're not going to do any takeaway. It's not their style of food is not something that lends itself to takeaway. It wasn't a big part of the business. So they decided they're going to pull the shutters down. They've made some deals with some landlords, and they're going to try and come back in 6 months' time. So they've laid off some staff. They've got some rent abatement. They're just trying to cut their expenses. So we've gone through their policies and identified certain things that they can remove. And we've negotiated with the insurer, and they've reduced the liability premium because the risk of food poisoning and all that sort of stuff during the shutdown period is not going to be there. We've taken off their money cover because they're not going to have any cash on the premises. We've removed their business interruption cover. Now that's something that we would have liked them to keep because they still could have a fire or something, but their budgets didn't allow them to keep it. So what we've ended up with is a bare bones policy. It's really just covering fire and perils. So if the place burns down, all their fit out's covered. Some basic liability and glass cover, which is a condition of their commercial lease. So that client, their premium probably reduced annually from $25,000 a year to maybe $5,000 a year.
wow.
And that will renew. That policy will renew again in a few months' time. When that falls due for renewal, we might have the option to go to the insurer and put that premium on hold for 6 months. But talking with the client, probably a better option is rather than just hold that full premium off, we'll look to get them onto monthly instalments so they can pay it month by month over the 12-month period. And a lot of insurers are offering monthly instalments at no additional cost now. The issue that we've got, if we take the 6 months premium abatement, in 6 months' time, if that business isn't up and operating again, we're going to have to find 6 months premium, and we can't then look at monthly instalments at that time. Even if the insurer didn't offer monthly instalments, we do have options with premium funders and stuff like that where we can fund it. But again, if we don't start that at the inception of the policy, then our options are sort of over once we get to that 6 months. So again, we're open to everything. We would have all those conversations with clients, and really, at the end of the day, it's up to our clients and how they want to manage those premiums. But we just think potentially that monthly instalment is a better way to go than just putting a hold on your instalments for the 6 months.
Luke, if I was to put a hold on it and I'm
Yeah.
not paying for it, are they still covering me?
Yeah. So IAG come out and said, okay, if you can prove that. IAG might not even have to prove. I know some of the others you've got to prove your own hardship. But yeah, if you put a hold on those premiums, and in 2 months' time you had a significant claim, the insurer would still pay the claim. What they do is they deduct your outstanding premium from any claim settlement, but they will pay your claim. But in 6 months' time, they're going to want their 12 months of premium.
Okay, so then you'd have to pay the full premium over the next 6 months or something like that.
Well, you've got to pay your full premium in 6 months' time. So if your premium's $5,000 and your policy is due on the 1st of April, that $5,000 is going to be due on the 1st of October. not the 1st of April, but then your policy is going to renew in April again next year. So you're going to have to find 12 months premium in October and then another 12 months premium in April next year.
So for example, Luke, you know how we renew a lot of our premiums in December and we pay monthly for most of ours because of cash flow. Say, for instance, I'm just going to use this because a lot of guys will have this type of situation. So take our example. Say we defer our premiums for 6 months, right? So the monthly premiums for 6 months, which means we're effectively 6 months behind. But then we start making the last 3 months of the year. How does it work on rollover? Do we have to pay the 6 months before we can roll over to the next lot, or will they build that into the next 12 months?
If you're on monthly instalments now, there's a potential, if you sell this, and we're going to find it pretty tough for the next 3 months, we could potentially put those instalments on hold. That would then add them to the end of the policy period. But if the policy is renewed in December and you said I'm going to use that 6 months premium abatement, all you're really doing is you're extending, you're going on payment terms with the insurer. So they're not extending your period of insurance by 6 months. They're just giving you 6 months to pay that annual premium.
So at the end of the 6 months, you have to pay that 6 months.
You'll have to pay it before you renew. Is that what you're saying when they renew?
At the end of that 6 months, you'll have to pay that annual premium. So all they're doing is your premium's $5,000 and it's due in December. It won't be due in December. It'll be due in June. So you have to pay the $5,000 in June. But your policy will still renew again in December next year. So you're going to have to really find, 2 years of premiums in that 6 month period.
Yeah, but for some clients that are, have got no income, Luke, or, down to 10 or 20%, 20 or 30%, that is an option for them.
Yeah, that's an option. As long as they're aware that they're going to have to pay that annual premium in 6 months. Well, our concern is that our option, so if you decide to go down that path in 6 months' time, you sort of can't then go onto a monthly instalment plan.
Yeah. What about if you were 4 months into it? Could you come and talk to you then and potentially?
It's still going to be difficult because the premium funders are being are a little bit worried about what's going on. So we're finding it. Well, we've got access to premium funding. They're saying, well, we don't like 12 instalments. We'd rather do 10. So they've got their security for the banks. I mean, I suppose the difference between what the banks are doing and what the insurers are doing, with a bank, they've potentially got security of a house or a business or something like that. Whereas insurance is a short term. It's only a 12-month term. So with premium funding, the only thing that the funders have got security on is that insurance policy. So they really don't like, providing credit once the policy has expired because their security's gone.
Yeah, fair enough.
So there's certainly options, but yeah, it's really up to the individual business and how they want to handle it. I think it's just important to recognise that it's not free insurance for the 6 months. The insurers are still going to want their premium at some stage.
Yeah.
A couple of other Q&As, just some common questions we've had. Another big one is cyber risk, and this probably gets back to working remotely as well. Cyber insurance in general is something that there's been a real big talking point of ours for the last few years, and probably something that we weren't even talking to clients about 5 years ago. A lot of our insurance claims now are things like clients getting hacked or breach of privacy or ransom demands and things like that, even before COVID-19. What we're probably seeing or what we're worried about is that with people working remotely, because businesses have got people working remotely quite quickly, some of the normal security stuff that clients have got on systems have gone out the door just because there's a need that we just need to make this happen. And cyber criminals are probably going to take advantage of that. So it's probably just important to make sure that if you do have a cyber insurance policy in place, that you make sure that your insurer is aware that you are now working remotely. And if you don't have a cyber insurance policy in place, then this might be something worth considering at the moment, because we just think there's going to be a spate of those sort of claims. And you only have to watch the news where there is warnings from cyber experts to be really careful at the moment with scams and stuff that are in place. And it could even be text messages and stuff that you click on a link on your smartphone and it takes you into something that's watching what you're doing. So most good cyber policies should automatically extend to cover while you're working remotely. And a good example is that yours, Anita, which yours automatically covers without us even speaking to the insurer.
I was about to say, I need to let you know that we're working from home, Luke, but just a quick question back there, going back to the other side. Where you aren't at your business, you know, for the 60, 90 days we were talking about, do you need to let your insurer know that?
If it's going to be unoccupied, yes. Yep. I definitely have that conversation.
Okay, cool.
So to your cyber, a couple of other important ones we've been talking about is probably where we've seen the high frequency claims the last couple of weeks is corporate travel. We had a number of clients that had travel booked who could no longer go. We had clients stuck overseas and have incurred additional costs to come back. It's really important now going forward that because COVID-19 is a known incident, if you were to book any travel into the future and you lost those deposits, there'd be really no cover under a corporate travel cover. Same as if you decided now is a good time to go and travel overseas against government advice. We got a lot of claims where clients have booked travel before, say, Feb this year, and those claims are getting paid if clients have lost deposits under most good corporate travel policies. But going forward, because it's a known incident, there's really not going to be any cover. So it's really important to keep that in mind. Another one is just, I suppose, businesses keeping in mind that they need to be managing the risk around OH&S and directors and officers liability. And if you're a business that decides it's a good idea to keep enforcing that your staff come into the office every day and don't practice social distancing, directors of those businesses are probably going to be in the gun. Probably the same as employment practices liability, where if businesses think that Fair Work are going to take a holiday over this period, it's just not going to happen. We're already seeing a lot of additional questions from management liability insurers when we go to renew policies. And all those questions are around, are businesses following government advice in relation to social distancing and working from home and these sort of things. And the insurers are getting a little bit worried that there is going to be, some significant claims in this space, whether or not it's for, staff getting injured at home because they're not following OH&S rules, or businesses are letting people go without following due process. It's really important that businesses and directors are across this stuff to make sure that they're not in the gun for directors and officers and employment practices liability claims and things like that.
Okay, so that's going back to, like, we had Employsure on last week, and they sort of touched on those sort of things. That's what you're sort of saying. This isn't your area of expertise, but obviously there's some sort of insurance that you can have, as provided you are seen to be doing everything you're required to in this space.
Yep, and a management liability cover, if a business has got that in place, will cover things like employment practices liability. So claims against the business for breaches of workplace law and stuff like that. But you're exactly right, Neda. So if you've got to be negligent. So if you're making a commercial decision to do something knowing it's not right, an insurance policy is not going to respond. If you're well aware that you shouldn't be telling your people to come into work during the lockdown period, you're still enforcing it, and somebody gets sick, the insurer's not likely to help you with a claim. So it is important that you understand what those government advice warnings are, and you follow them, I suppose, the letter of the law.
So I have this policy in place, Luke. Everyone's working from home. I've given them a questionnaire to say make sure their office space and their environment's all good. They walk out to the kitchen to make a cup of tea, they trip over the cat.
Yep.
Are we all good?
It's going to be an interesting work cover claim, isn't it? I mean, if you've given somebody a checklist and you've gone through and you've made sure to the best of your ability that they're operating safely from home, you get that claim, and it's called statutory liability under your management liability cover. If you've tried to do everything right and WorkSafe came after Superior for that sort of incident, I think you'd probably be in a pretty good position.
Okay.
But
we have to have this cover in place to be protected.
Yeah, it's statutory liability cover. And we think there's probably going to be some work cover claims and stuff come out of the back of this. I know what we've done internally here is we've given everybody a checklist, and we've wanted to make sure that people are working safely from home and they've got their computer at the right level and all that sort of stuff.
Yeah.
A couple of other things. Just if you've got any clients that are builders, similar to the business covers and the unoccupancy clauses, if you're a builder and you've got a contract works policy, which is a policy that you take if you're, say, building a house, and those policies will cover a builder while they're building a house until they hand it over to a client. Under those contract works covers, there's generally a cessation of work exclusion, which, similar to an occupancy exclusion, basically says that if work on that project stops for a period of time, and it could be 60 or 30 or 90 days, it depends on the policy. Similar to the unoccupancy clause, it basically says there's no cover in place if that cessation of work extends beyond a period of time. So similar to the business covers, it's just important to have a conversation with your insurer if those building sites are shut down because there's a government shutdown. At this stage, it looks like things are still moving in that building space, but that could change.
So what are you saying there, that they are covered or they're not covered by the COVID-19 if the government shuts it down?
It's more cover for the works themselves. So say a builder is halfway through building a house and there's a government enforced shutdown and nothing happens on that site for 6 months, potentially there's no cover for the work that the builder's done to build the house to that point.
Yeah, so say they had a frame and, we go through winter and so it's absolutely smashed and damaged and all the rest of it.
Yep.
That's what you're saying?
Yeah, that's what I'm saying.
Okay.
Yeah, so it's just being, again, it's similar to that occupancy clause. It's just having a conversation with that contract works insurer and being aware of what that endorsement is. And again, the insurers will be pretty good there, providing you know where you're covered, and I'm sure they'll extend those exclusions out. Probably the last one that we've had a fair few queries on is trade credit insurance. And trade credit insurance is all about insuring a business's debtors, and it's a bit different to debtor financing. Trade credit is all about if a business is worried about one of their debtors, you can take insurance to cover that debtor if that debtor becomes insolvent. We got some businesses that say sell food wholesale to restaurants, and they're worried that they've got some big outstanding debts on their age outstanding debtors list at the moment, and they're just concerned whether or not they're going to be paid. Unfortunately, most trade credit insurers over the last couple of weeks have got really strict on taking out new policies to cover that sort of thing. Also had a lot of queries from clients in the building space because often there's a flow-on effect. If somebody's not being paid, then the contractors aren't being paid. It's really difficult to get that cover at the moment. And probably what we're reminding clients about is just maybe having a look at your trading terms and stuff. If you're concerned about certain debtors, it's going to be really difficult for us to get that cover at the moment if clients want to look at it.
But if you did have it in place, are you saying that you would be covered for this COVID-19?
If you had it in place and that debtor became insolvent, then yeah, providing the insurer hadn't changed limits, yeah, you'd be covered for it. But you've got to remember that trade credit cover really only responds if the person becomes insolvent that owes you money.
And I know with the insolvency rules, are you about to touch on them?
No, not doing them today.
Yeah, I know that they've all changed a little bit during this period too. So there's way more leniency in this area. So once again, it's probably even a bit harder to implement this. Yeah,
and that's why the insurers, because their goalposts are moving, they're really saying, listen, we'll look after our existing clients in this space, but we're really not prepared to take on any new risk.
Yeah.
That's they're probably the main questions we've been asked. Not sure if anybody else has got any questions.
Well, we've been trying to ask pertinent questions all the way through that everyone else is going to want to know. Are there any other questions at all, guys, before Luke signs off? Luke, we'll just pause for 30 seconds.
Yep.
And as I explained to Mark, there's going to be lots of people listening to this later too. So, which is why I've got the slide up that has your contact details there, as in the general contact details.
Yep.
I'll just pause for a little bit longer and see if there's any more questions. Doesn't look like it, mate. Thank you so much for coming on today, Luke and Mark, for giving us your expertise. And as Nita said once or twice during this, where it's nice to have you guys behind us is if when claim time, that's when you go into bat for us and make it a lot easier to get our money that we're entitled to. So not only it's important to seek advice to get the right policies for the right amounts, which is your specialty, obviously, but when it comes time to claim, we're much more likely to have a good result because we've got you guys going into bat for us, and you know the rules and you know how the insurance companies work and what they need, and that's where it pays for itself anyway. Many times over is at that time when you really need the money. So thank you very much for coming on, guys. Appreciate it.
Thanks for the opportunity.
Thank you.
And I'm going to sign off on your presentation and I'm going to go into mine. So thanks, guys.
Thank you.
Thanks. Bye, guys.
Bye.
See ya. Bye.
So now we're going to state-by-state stimulus package.
Yep. Hang on. Just give me 2
It
seconds.
never ends.
No, never ends. Okay, can you see that?
Yeah,
Yep,
we
you
can.
can. Just let me, hang on, just get my Q&A box coming up. Just bear with me. Where'd the other one go? Okay, now, what I'm going to do now is, I won't lie to you, this is pretty heavy stuff what I'm about to go through. So I've intentionally put a lot of content on these slides so that you guys can go back at your leisure and read the relevant state that suits you. I'm probably not going to read all this word for word. I'm just going to skip over it, give the slide enough time for you guys to pause it and read it. And I'll pick out probably the big ticket items from each slide, but it's definitely got every state on there. And the problem is this is basically as at the 31st of March. So, you know, there seems to be things changing all the time. So, you know, just bear with us that it's only up to a few days ago, okay? Because these things come periodically, spasmodically. So, oops, hang on. I will. Okay, New South Wales. There's 2 lots of measures. There's the left-hand column is effectively the measures they introduced initially, and the right-hand column is the measures that they added to on the 27th of March, a second stimulus package. The main thing I'm going to go into is the payroll tax. On the left-hand side, the waiver of the payroll tax of businesses with payrolls of up to 10 million for the rest of the 20 financial year, which is really cool, and it's based on the payroll tax group. So in other words, if you've got multiple businesses and they're linked for payroll tax, which most businesses will be these days, it's done for the group. And the other thing about the older measures is they're bringing forward the next round of payroll tax cuts by raising the threshold limit to $1 million for 2021.
We've actually dealt with rent.
Yeah, but that's only for government-owned properties. So on the right-hand column, there's a rent deferral for 6 months for commercial tenants with less than 20 employees where you're in a government-owned property. So it's not for every other independent-owned property. It's only for government property. And with payroll tax, they've extended the deferrals to large businesses with more than 10 million for 6 months. So next slide, Victoria, payroll tax, full payroll tax refunds for the 20 for small and medium businesses where payroll is less than 3 million. There's not going to go into too much of this. There's also hardship grants available depending on certain industries, and they're waiving some fees on liquor licenses and that. And once again, they've got rent relief for commercial tenants in government buildings. Queensland, payroll tax. Payroll tax seems to be a trend here. Small and medium businesses with less than 6.5 million in taxable wages will be eligible for a 2-month refund. Wow, that's big of them, isn't it? A 2-month refund and a 3-month payroll tax holiday and deferral of payroll tax for the rest of 2020.
I'm going to defend Queensland. They've come out with a beautiful loan package.
Yeah, that's coming up.
All right.
That's coming up.
So I'll defend them.
Larger businesses will be eligible for a 2-month payroll tax refund and deferral for the rest of 2020. But as Nita mentioned, the next 2, I think, is where they stand alone. low interest loan facility. For all you guys, I'm not going to go into this now, but for all you guys that were on Melissa's call last week, if you weren't and you're in Queensland, please go to our website under resources and webinars and go to the one that was on finance, because Melissa covers a whole slide on the Queensland facility available for obviously Queensland-based businesses. They have got a ripping product. There's only 500 million of funds available. They're low interest. Interest is basically interest-free for 12 months. And the terms of and what they allow and the rates are extraordinarily good. So if I was in Queensland, I'd be really excited about potentially looking into this and applying and seeing how you go. Subject to obviously applying this to your own circumstances, but no other state has got anything like this. So if you're in Queensland, you lucky buggers, not only do you get warmer winters, you also get an amazing low interest loan facility, which is part of the state government stimulus.
I'd like to say something there. Like some of our clients are there and they're definitely wanting to take that up and they're needing their 19 tax return done. We are aware of that and we are prioritising where we can.
It's not always necessary 100% that they need 19 done, but if you, like, the beauty of this product is it's come out through last week's conversation that some guys who have trusts, in other words, who live off trust distributions or drawings and don't draw a wage, the beauty of this product is you can actually, because it's limited to a percentage of your overheads, right, as to what the loan can be. The beauty of this product, don't hold me to it, my understanding from third parties, is the drawings for trusts can be factored in as part of the percentage of overheads. So they're actually one of the, I think the only product out there at the moment, state and federal, that factors in trust distributions into the calculations for everything, or drawings in other words. So really look into it, guys. And if you want more details, go back to that webinar with Melissa, which is on our website. The other thing which I was rapt to see is that sole traders and small and medium-sized businesses will receive a $500 rebate on their power bill. I don't think there's any other state offering that, where businesses are using less than 100,000 kilowatt hours.
It's automatic too.
Yeah, I'm not going to go into this. There's other things about diversification grants. So there's grants available if you try and move your business model to some other type of business product, which I think is pretty proactive. They're giving you $2,500 to $50,000 to help you conduct evaluation studies to potentially and buy equipment, et cetera, to help you try and diversify your business away from its current model to work in this current climate. And they've got the standard fee variations. And they're also offering small business mentoring. And interestingly, the bottom point, a 1.1 million market-ready initiative offering tailored advice for small businesses on leveraging opportunities in the Chinese online market. So that's a very obscure benefit they're offering people.
But can we just go back with that loan? There are limited.
I said that. There was 500 million.
Okay, cool.
So if you're really keen on that, get in, because I reckon there's going to be a lot of people going for that because the product is amazing and really priced well. South Australia, I don't know that there's a lot in South Australia. So I'm just going to, they've got payroll tax relief, land tax relief, which is really cool. And there's other, 300 million set aside to help businesses and industries who are affected to try and get through this, which I think is really cool.
You just don't know what the assistance is?
No. Western Australia, there's payroll tax relief again, and payroll tax threshold changes from 1 July 20. So it seems to be a consistent trend that payroll tax seems to be really addressed in every state. But Queensland, you lucky buggers, are the only ones with the really good loans. Once again, there's rent waivers for government-owned buildings. That seems to be consistently a trend as well. Tassie, I will pause on Tassie because there's people I know affected by Tassie. There's 20 million in interest-free loans in certain sectors. Payroll tax, they're going to be waived for hospitality, tourism and seafood industries for the last 4 months. And other businesses impacted with payrolls up to 5 million can also have their payroll tax waived for the last quarter of the financial year. It's not much, but it's better than nothing. And there's fees on licenses like most states seem to be having. Northern Territory, I actually won't go through this. I don't think anyone that I deal with works in the Northern Territory. I'll quickly pause on the Northern Territory slide to see if anyone might want that down the track.
Oh, there's a kind of survival fund.
Yeah, no, I'm not going into that. ACT, I know that affects people. Payroll tax deferral. There's interest-free deferrals of payroll tax from 1 July 20 for all businesses up to a payroll of 10 million to help with cash flow. There's rebates on commercial rates for properties with a valuation below 2 million, which is with particular targets of businesses who own their own premises. I know that will affect certain people. I reckon that's a good incentive. And there's waivers on liquor licensing. That seems to be a trend as well. Waiving on liquor licensing, etc. Now,
they had something there for power bills too.
Where?
Or was it only for the entertainment industries?
I think that's only. Actually, no. I think it is $750 for small business owners to help with power bills. That snuck in there. Sorry, I missed that. So, what seems to be I've really rushed through that, guys, because I know we've had a lot of webinars of late, and I was just trying to skip through that so people could go back and assess their own state at their leisure. What seems to be the trend here with these states is the only consistency seems to be payroll tax and liquor licensing, and the rest of it seems to be all over the shop. So I wish they'd all put their heads together and tried to come up with a consistent Australia-wide thing that they each apply state by state. But if you want my opinion, I've said it twice already, Queensland seems to take the cake with that loan product. And God, I hope some of the other states follow suit and bring something similar out, because I reckon it's seriously worth looking at.
Do you know, like say with the payroll one, will it automatically be triggered? We don't have to.
Don't know the answer. Don't know the answer to that.
Something that we have to do for everyone again.
I don't know the answer to that. It depends who handles the payroll, but it's something that whoever does the payroll will need to assess. But you business owners out there who listen to this, be aware of the things yourselves, and depending on who handles the payroll, I know we do payroll for some people. That's something we will endeavour to be on top of for that. And for anyone else who we don't do the payroll for, please make sure your bookkeeper, or if it's yourself that does everything, are all over the payroll tax measures in your state, because it's going to be governed by whoever does the payroll / bookkeeping. Is going to have to be all over this to make sure it's, as Nita said, good point. I don't know whether it's going to be automatic or not. So we have to be all over it and make sure that whoever's handling that. And you guys have obviously the responsibility from top down, being the director or owner of the business, to be on top of it, as do the people who are actually doing it at the bookkeeping / payroll level. So I've rushed through that really quickly, and I did that intentionally because of how heavy it is, and people can go back and look at this at your leisure. Any questions at all before we sign off for tonight? I'll pause for 30 seconds.
I don't think you're going to get any yay.
This must be the only presentation we've had where we haven't been absolutely hammered with questions.
That's
so
right. That's all good.
Sometimes that's not a bad thing.
No,
So as always, we will be putting this presentation up on our website under resources and webinars, and we will be emailing you a link to it each so that you can watch and listen at your leisure again. It was pretty heavy, the whole presentation, but the topics that we were covering were pretty heavy. So you've got to really dot your I's and cross your T's with all of that stuff. So we have another webinar tomorrow night for you business owners out there.
Is crucial.
And 5:30 p.m. tomorrow night. It's hosted by Dr. Jesse Green and myself. And you guys should have already received invitations from either him or us. So you must come on to that, because that's about practically going through drilling into the practical application of all the stimulus that we've had our various webinars on. And it's not as good as everyone thinks it is. And so please come on tomorrow.
So, like Adrian and I have spent the weekend putting the jigsaw puzzle together and working out how each one flows into the next. And I don't think anyone's actually sat back and done that. And we've sort of found out that potentially those that are really being affected, what's on offer isn't as good as what we would all have hoped.
So what Lena's really saying is the theory behind what the government has been putting out there in media channels is awesome. And the theory is what we've had our webinars on over the last week and a half, which are all on our website. But when it came time to putting what we've done is tried to put a practical thing together where we sit down one-on-one and apply the theory to each of you individually. When we got into those sorts of headspaces and tried to put a system behind it and dug deep, we asked a lot more questions and got answers we weren't expecting. So hence, we don't think it is as damn good as everyone thinks it is. And I'm going to cover all that tomorrow night. So please come on and register. But until that Take care of
And
yourselves.
guys, do get in there because there is limited numbers. And when the first thing did go out, within a couple of hours, there was about 150 spots taken. So yeah, please do register so you do get on.
So thank you all for your time. I appreciate it. There's been a lot of these webinars, but the whole point behind them has been to provide as much general information about everything so that when we have our specific calls, we can apply all this general information and how you can best benefit one-on-one. So until we speak again, take care and we'll be in touch shortly.
Bye all.